Hi, everybody. Welcome to my channel. Today, I'm going to cover the importance of preparing yourself for home ownership. My name is Keita. I'm a local realtor in the Los Angeles and Kern County area, and I'm just spreading awareness on what to expect when purchasing a home. Okay, so I've created a buyer's guide to give you some details on what to expect. In this buyer's guide, I'm going to go over, excuse me, myself and preparing you to buy. The home buying process, what does a pre-approval versus a pre-qualification look like? Which loan is right for you? The loan application checklist, questions that you may want to ask a lender or lenders, finding your dream home, what are your wants versus your needs, house hunting tips, the compare property sheet, making an offer, negotiations when buying a home, how to make an offer, counter offering, going under contract and being in escrow, what not to do, what happens when your offer is accepted, the final steps, and closing. Homeowner and title insurance. Those are required things that you may need depending on what type of loan you use. But for sure, you will need the title insurance. Homeowners insurance, that is highly recommended as well. Your closing day and the real estate terms. So again, welcome. One thing about me, or should I say a few, is I value um, a few things here that shapes my service. I believe in fostering respect, dedication, transparency, integrity in all my work. For every client, I prioritize open communication throughout the entire transaction. Take a moment to get to know me, and you'll both have not only a trusted advocate, but also a friend for years to come. I'm full of knowledge, wisdom, and I'm ready to strategically guide you through the entire home buying and selling process. Again, this is me here. I'm excited to just connect with you all. Again, I am located in the Los Angeles and Kern County area. So if you are in need of a realtor, definitely reach out to me. You definitely can connect with me through Facebook and Instagram. My Facebook handle is Keita Sells RE for real estate, and my Instagram handle is Real Estate Keita. Preparing to buy. So your first step, you're going to get pre-approved. And by doing so, you would have to speak with the lender if you're going to be financing. That lender is going to review your credit to determine your mortgage. And then from there, if everything goes good, then you would be given a pre-approval letter. The second step would be to home shop. You're going to discuss your criteria with your real estate agent and tour open houses and your price range. The third step, you will be making an offer on the home that you've toured. And then your agent would be negotiating the terms of the contract and you would sign it. The next step would be to do your due diligence. You definitely want to schedule a home inspection. This is something that is optional, but I would highly recommend it. And then you also would have that appraisal that is required. That appraisal will determine whether or not the home's value is worth what they are listing it or it's selling for. That may make or break a deal. So that's something to keep in mind. And then that home inspection is basically finding issues within the home that may need to be repaired. So that's something that I say I would highly recommend that you look into because it can cost you thousands of dollars depending on what needs to be repaired. Next, you will negotiate the repairs, begin title exams, and finish the loan process. All right. The next step after that would be pre-closing. So you're going to confirm the repairs that are completed, have a final house walkthrough, and send the funds to the title company. Last step here is you're at the closing table. You're going to review the closing statements, sign closing documents, and receive the keys to your new home. Congratulations. So first and foremost, here is the difference between a pre-approval versus a pre-qualification. Now, a pre-qualification is just the first steps. It gives you a rough idea of how large of a loan you'll likely qualify for. It is only based on the information you give to the lender and can be done over the phone or online. And there's usually no cost involved. However, a pre-approval is something more ideal. This is the second step. To get pre-approved, the lender will ask you for documentation to perform an extensive credit and financial background check before making an offer on a house. It is best to get pre-approved to show sellers that your offer is serious, and the lender has already approved you for enough money to purchase the home. The next step here is figuring out what sort of loan is right for you. There are a number of loans to choose from when you buy a home, so it's important to fully understand the advantages and disadvantages of each type before you make a decision. So the first one here that I have, this one is pretty popular. It's called a conventional loan, and it's typically offered through private lenders. The overall borrowing costs and interest tend to be lower, but you have to pay 20% on a down payment or pay private mortgage insurance if the down payment is less than 20%. It requires a minimum credit score of 620. The next one would be an FHA loan. FHA loans are designed for those with a high debt to income ratio with a low credit score. They are insured by the Federal Housing Administration. An FHA loan can allow you to buy a home with a credit score as low as 580 and a down payment of 3.5% of the purchase price. A VA loan, that's another option here. VA loans are insured by the Department of Veterans Affairs. You must meet certain requirements or service requirements in the Armed Forces or National Guard to qualify for a VA loan. And then I also see here that we have the USDA loan, which are insured by the United States Department of Agriculture. In order for you to qualify for this, that home would have to be purchased in a suburban or rural area. And then here is a list of, the down payments that are typically required. You see here for the conventional, you have a 3 to 20% down, FHA 3.5 to 20%, VA, there's no down payment required for that. And then that USDA loan, there's no down payment required for that. And then the terms for all are between 50 to 30 years. And then the mortgage insurance, that's an additional fee that you would be paying on top of your principal and interest. So if you go with the conventional route and your down payment is lower than 20%, then yes, you would have that mortgage insurance. But if you go with an FHA loan, you would have it as well. If you go with the VA, you would not have that mortgage insurance. That's one good thing about the VA that I do like. And then the USDA loan, it would be required. And then here's the minimum credit scores that are required for each one. So for conventional, we see 620, FHA 580, VA is no minimum. They're pretty flexible when it comes to eligibility. And then we also have the USDA loan being at 640. So the home loan application, lenders will request paperwork for your mortgage application that proves things like how much money you make and how much debt you have. Here's just a few examples of what you will need. As far as income goes, you will need 2 years of tax returns. W-2s, they want to see the last 2 years. Your pay stubs, the last 2 months. If you have any additional income like child support, pension, retirement, etc., that'll help as well. And then if you have any assets, bank statements, investment statements, insurances like life insurance, that also will help you as well. Couple questions that you want to ask your lender to determine if it's a right fit for you are, which type of home loans do you offer? What's your average loan processing time? What will my interest and annual percentage rates be? Do I qualify for any special programs or discounts? What estimated closing costs can I expect to pay? One question that I did not see on here was about down payment assistance. I know some people do use that. And so I would ask something along the lines of, if I accept this down payment assistance program and I use it to purchase the home, are there any repercussions, any type of penalties, anything along the lines of that? Because There are some loans, down payment assistance loans that are forgivable, and then there's some that aren't. So that's something to think about because, at some point you may want to sell that home. And if that does happen, um, you want to know where you stand. So you want to know if you're going to have to pay that back or, things of that sort. So just keep in mind of that if you do go the down payment route. Finding your dream home. So here's a list of, some things that you want to keep in mind. What are the needs and what are the wants? Sometimes, you know, we may just have to have focus on our needs versus our wants. So that's something to think about, especially when it comes to your price point here, right? So house hunting tips here. I highly would recommend that you investigate the area before moving in. Um, Drive around the neighborhood that interests you to get a feel of the area, how the homes are cared for, what the traffic is like. You want to know what the people are like in the neighborhood. Are they friendly? Are they standoffish? Things like that, because that does matter. Ask around, talk to family, friends, and coworkers to see if they might know, a house for sale in the area that interests you. You might be lucky, and one of them might even know someone that's thinking about selling, and then you may get first dibs on that before, it even goes on the market, or it might not go on the market. So that's something to think about. You also want to keep an open mind. Finding your dream home is exciting, but not always an easy task. Have a priorities list, but keep an open mind when viewing houses. Again, when it comes to that price, you may have to compromise, until you may get in a better financial situation and then you can upgrade to something better. So that's something to keep in mind. Take pictures and notes. When you visit multiple houses, it gets difficult to remember specific details about each one. So by you taking pictures and notes while touring houses so that you can reference them later when comparing the properties that you've seen, that definitely will help you out when coming up with a decision. And then be ready to make an offer. Time is definitely of the essence. So, if you see something that you really like, put that offer in and see what happens, because houses they're quick to go, quick to be listed and quick to go, especially if they're extremely desirable. And here's a compare property sheet. This is just a breakdown of, you listing the addresses, the price point, the bedrooms, the features, things like that. So you have a reference to compare to. Making an offer. Okay, so negotiations when buying a house. First, you want to assess the housing market conditions. Find out whether the house you hope to purchase is in a buyer's market or seller's market. In a buyer's market, you'll be able to negotiate more forcefully and can put a lower offer in initially. There are more houses than there are buyers, so sellers are more eager to get homes off their hands. In a seller's market, there are more potential buyers than there are available houses, so sellers have more bargaining power. Number two, be ready to haggle. If you're in a buyer's market, you can start with a lower initial offer price than the seller listed. But even if you're in a seller's market, you should still be ready to haggle to get the best price for you. Always be ready with the counter offer until you're sure that the seller won't budge anymore. While the seller expects you to haggle, avoid making lowball offers so small that you feel you're wasting their time. Similarly, don't go in with a higher offer than you can afford because you definitely do not want to be house poor, okay? Number three is to get your mortgage loan ready. Prior to making an offer on a home, work with your bank or whichever mortgage lender you plan to use to provide proof of home loan approval. This pre-approval letter will allow you to negotiate more strongly, as it proves you'll be able to pay a mortgage for the house over which you're haggling. And then lastly here, you want to inspect the house. Work with the home seller to do a thorough home inspection before making any final offers. This helps you figure out if there are any necessary renovations required or issues with the house that the seller failed to disclose upfront. Occasionally, you can insist the seller pay for these changes before they sell you the house, which knocks down the overall cost. How to make an offer on a house, you want to decide how much to offer. So it's important to stay within your budget, but you shouldn't just throw out a random number. You're looking for that sweet spot between getting the best possible price and not insulting the seller by making a lowball offer. Consider how long the home has been on the market, comparable homes in the area, necessary repairs and renovation, and the competition on the home when making an offer. You definitely want to decide on contingencies. Contingencies are clauses in a sales contract that allows buyers to walk away from a sale with their earnest money, which is essentially a type of security deposit. Common contingencies include the home inspection, appraisal, financing, and title. When a contingent condition fails to be met, either party can cancel the deal and pursue other prospects. So again, there's no penalties there. You're able to walk away with your money returned back to you. So that's what I love about contingencies, because there are cases where sometimes you are out of cash and it's thousands of dollars that we're talking about. So next, you want to decide how much earnest money to offer. Earnest money is technically a good faith deposit you have to submit when making an offer. The earnest money requirement varies from market to market, but it's typically 1 to 2% of the total home price. That said, the more money you offer, the better your offer looks in the eyes of the seller. This money will be held in an escrow account and will later be applied to your mortgage down payment. Write your offer. When you've come up with an offer, it's time to convey that offer to the seller. Your real estate agent usually draws up the offer letter for you. The offer letter includes the address of the house you want to buy, the names of the people who will be on the house title, the amount of money you want to offer, your mortgage approval letter, contingencies, as well as other things. And then you also want to negotiate the price and the terms. After you formally made your offer, it's up to the seller if they want to accept it. The seller can accept your offer, make a counter offer, or reject your offer completely. Now, when it comes to counter offering, this is something that you can consider here. If the seller responds with the counter offer, it's up to you to decide what to do next. Your real estate agent can get in contact with the seller or their agent to get a feel for what the seller hopes to get for their home and whether they're willing to negotiate with you on price and terms. Okay, so here are 3 tips to consider when receiving a counter offer. The first one is you can negotiate more than just the price. You may be willing to trade concession or repair requests for a lower purchase price. Work with your real estate agent and the seller to see if you can reach an agreement for the home. Number 2 is try to find where the seller's pain points are. Do they need to close quickly, or would they rather push closing out as far as possible while they look for their next home? If you're flexible, you might be able to solve a problem and make your offer more attractive to the seller at the same time. And lastly here, third is to write a home offer letter. Your agent can help you decide whether it's a good strategy for your particular situation. This should be a heartfelt letter from you to the seller that lays out the reasons for wanting to buy their home. If the offer is similar to others that they're entertaining, your personal plea might be enough to push your offer to the top of the pile. This is what happens when you're under contract and in escrow. These are some things that you should keep in mind on what not to do when you're under contract and in escrow. Don't do any of these. Lease or buy a new car, change jobs, move money around, disrupt your credit score, open a new line of credit, make a major purchase, or miss any bill payments. Doing so of any of these things can kill a deal. So just always remember, just try to keep things as is that got you accepted, that got you approved, and, just stay put, because you won't have to wait too long. It takes about 30 to 45 days to close on a home. So that's something to keep in mind. Keep your eye on the price. All right. So now your offer is accepted. Once you and the seller have agreed on terms, a sales agreement is signed and the home is officially under contract and in escrow. Here are the steps that follow. So the first step is to put your deposit into an escrow account. So your earnest money deposit will be put in an escrow account that will be managed by a neutral third party, typically a title company or a bank, who holds the money for the duration of the escrow period. They will manage all of the funds and documents required for closing, and your deposit will go towards your down payment, which is paid at closing. Number 2 is to schedule a home inspection. Home inspections are optional but highly recommended to make sure the home is in condition for which it appears. Inspections are typically completed within 10 to 14 days after signing the sales agreement. Number 3 is renegotiate if necessary. The home inspection will tell you if there are any dangerous or costly defects in the home that need to be addressed. You can then decide to back out of the deal completely, ask the seller for repairs, or negotiate a lower price and handle the repairs yourself. Number 4 is complete your mortgage application. Once you've come to an agreement on the final offer, it's time to finalize your loan application and lock in on your interest rate if you haven't done so already. You may need to provide additional documentation for your lender. Number 5 is to order an appraisal. An appraisal will be required by your lender to confirm the home is really worth the loan amount. The appraisal takes different factors into account, like similar property values, the home's age, location, size, and condition to determine the current value of the property. Final steps in closing. Congratulations. So, final steps before closing. Insurance requirements. Most lenders require both homeowners insurance and title insurance. See the following pages for more details about each of them. Your final walkthrough, that's an opportunity for home buyers to inspect the house before the official closing. The final walkthrough allows the buyer and the real estate agent to go through the house room by room without the sellers being present. Closing disclosure. Your lender is required to give you your closing disclosure, which tells you what you need to pay at closing and summarizes your loan details. It includes the loan terms, your projected monthly payments, and how much you will pay in fees and other costs to get your mortgage, closing costs. Homeowners insurance. Why do you need homeowners insurance? Homeowners insurance protects your home and possessions against damage and theft and is required by lenders before finalizing your loan. Policies vary and are completely customizable, so it's recommended to get quotes from multiple companies to compare price, coverage, and limits. What does the insurance cover? Homeowners insurance typically covers destruction and damage to the interior and the exterior of a home due to things like fire, hurricanes, hail, lightning, or vandalism. It also covers loss of theft or possessions and a personal liability for harm to others. What does it not cover? Most policies do not cover flood or earthquake damage, and you may need to purchase additional earthquake or flood insurance for this type of coverage. What are the policy rates based on? Rates are determined mainly by the insurer's risk that you will file a claim. The risk is based on your personal history of claims, frequency, severity of claims, past history of claims in the home, neighborhood statistics, and other home's condition. How can you qualify for discounts? Many insurance companies offer discounts to seniors and also to customers who have multiple policies with them, like auto or health insurance. Having security systems, smoke alarms, and carbon monoxide detectors can also lower annual premium rates. When getting quotes, be sure to ask each company about their discounts and cost-saving options. Title insurance. A title insurance is an examination of public records to determine and confirm a property's legal ownership and determine whether there are claims on the property. A clear title is necessary for any real estate transaction. Title insurance protects both lenders and home buyers against loss or damage occurring from liens, encumbrances, or defects in a property's title or actual ownership. Common claims filed against the title are back taxes, liens, and conflicting wills. A basic owner's title insurance policy typically covers the following: ownership by another party, incorrect signatures on documents, in addition to forgery and fraud, flawed records, unrecorded easements, outstanding lawsuits, and liens. There are two types of title insurance: lender's title insurance and owner's title insurance. Almost all lenders require the borrowers to purchase a lender's title insurance policy to protect the lender in the event that the seller was not legally able to transfer the title of ownership rights. While lender's title insurance is required for you to get your mortgage loan, owner's title insurance, which is purchased by the seller to protect the buyer against defects in the title, is optional. Closing day. This is the final step of the home buying process. On the closing day, you'll be going over and signing the paperwork. This is also when you pay your down payment and closing costs. These are a few items that you will need to bring, which are a copy of your closing disclosure, proof of funds for closing costs, your homeowner's insurance certificate, final purchase agreement, and your government photo issued ID. Congratulations! The ownership of property is transferred to you, and you're now officially a homeowner. Here are some real estate terms that you can review. Here you can take down some notes. And congratulations! If you would like to purchase a home and you are located in Southern California, you can either be in Los Angeles County or Kern County. I'm just one call away. Feel free to reach out at any time, and your wish is my command. I can be reached at 916-214-0180. It was a pleasure, and you guys have a great day.